and Assalamualaikum. My name is Amylia Nadia. Now we'll explain to you what is consumer credit. Consumer credit is personal debt taken on to purchase goods and services. Credit enables a person purchasing power for immediate consumptions. There are two types of consumer credit, which is open credit account and loans. Consumer credit has its own importance. First is ways of controlling money. In order to have a purchase or loan, the consumer has to think truthfully to have the most benefits for him and is affordable for him to pay later. Second is create an emergency fund. Let's say your car breaks down and you have no saving or cash to cover up the damage. So in this case, you can use your credit card to fix up, as it is considered an emergency fund. Third is pay all of your debt totally except for mortgage. For example, a student wants to pursue her study in a private university, but she can afford it. In order to pursue her study, she can take a student loan and pay it later when she graduates. Consumer credit has its own risks. First is default risk. It means that the likelihood of a person to not make payment on time. For example, even a person is qualified to receive $70,000, but the bank is still unsure if they are able to pay back on time. Second is credit spread risk. It means that the interest rate of bonds or loans is too low to be funded. Third is downgrade risk. Downgrade risk resulting from a downgrade of a risk rating of an insurer. Malaysia has its own credit score with the range of excellent, good, fair, and weak. The credit score is important for bank to see if you are liable to pay back your debt on time. Usually, your credit score is evaluated through payment history, balance owed, and credit history.
Hi and Assalamualaikum. My name is Siti Norsyarifah. What is open credit? Credit facility offered by retailer or financial institution will allow customer to borrow up a predetermined amount to pay for purchase. There are four types of open credit. The first one is credit card. The card is offered by the individual by bank in conjunction with credit card companies such as Visa and MasterCard. The advantage of credit card is provide a mean of credit, easy to use and also convenience, and there are no need to bring cash. The disadvantage is easy to get into debt and also the risk of fraud and overspending. There are three financial charge on credit card is annual fee, interest charge, and charge on cash advantage. The second types of open credit is charge card. Charge card is another means of payment similar to credit card, but amount must be paid fully every month. Third is retail charge card. Department store or retail store petrol station offer customer a retail charge primarily to encourage them to purchase goods and service from their store. However, this type of card is not available in Malaysia. Fourth is reward credit line or overdraft. The current account holder must get approval from the bank in order to be able to overdraft his account. The bank will notify the account holder the credit limit that he or she is allowed to have.
What is loan? Loan is an advance payment given to the customer and to be expected to pay back with some interest. There are three main types of loan: personal loan, car loan, education loan. The first type is more focused on personal expenditure such as wedding, home renovation, and more often, usually the bank providing them. Some lenders also charge a fees for personal loans. Personal loans can be used to cover up numbers of personal expenses. Personal loans also can be varied when it comes to interest rates, fees, amounts, and repayment interest. The second one usually taken by the borrowers to purchase their own transportation assets. Some lenders also charge a fees for personal loans. Personal loans can be used to cover up numbers of personal expenses. Personal loans also can be varied when it comes to interest rates, fees, amounts, and repayment interest. The third one quite essential for the family life because they are main support for their child education when they grow up. Education loan also can be defined as sum of money borrowed to finance a post-secondary education or higher education to spend their expenses. The education loan is intended to cover up cost of tuition, books of supplies, or cost of living things when the students are pursuing their degree.
Investment is the commitment of current resources or money with the expectation of receiving a large amount of resources in the future. We need to know our needs or financial goals, the various asset classes, how the market functions, to structure our portfolio and to monitor the investment. Risk taker will invest a majority of his funds in high-risk investment and have lesser amount to be invested in moderate and or low-risk investment. A risk-averse person, in contrast, simply prefer to take less risk. Safety in any investment means minimal risk of loss. Risk means a measure of uncertainty about the outcome investment range from very safe to very risky. Components of risk factor are inflation risk, interest rate risk, business failure risk, market risk, and global investment risk.
Now I will share the type of investment which including investment in saving account, investment in fixed deposit, investment in shares, investment in bond, and also investment in real property. Investment in saving account. Right, so the account is maintained by the retail financial institution that pay interest but cannot be used directly as money, such as writing a check. Right, so saving account will let the customers set aside a portion of liquid asset while earning a monetary return. Right. Investment in fixed deposits. There are two types, which is conventional fixed deposit and also Islamic fixed deposit. For the conventional fixed deposit, the payment of interest is subject to ABM, which is Association of Bank Malaysia, and no interest paid for the first, second, and third month, which is not run full period. And there are no interest also for the 4 month and above, which is before completion of 3 months, and the rate payable of fixed deposit withdrawn before maturity is half the contracted rate. Right, so the special for the Islamic fixed deposit, which is by using al-mudarabah, and also there are no interest charge. Investment in shares. Firstly, what is common stock? Okay, common stock is the type of stock that is sold to the public. It is created by the company to raise the capital and done through IPO, which is initial public offering. After that, investment in bond. Right, so bond is a long-term debt instrument issued by a corporation, either public or private, to finance a company long-term asset. Alright, so remember that there are 5 types of bond and also 5 characteristics of bond. Lastly, investment in real properties. Right, it is family, right? Right, so property investment is where the investor make a small investment in the property, then rent it out to cover the mortgage repayment, and then once it is raises in price, sell it or remortgage to accrue the finance tax fee and thus gaining a profit or to purchase more property.
Assalamualaikum, my name is Siti Syaradibah Binti Abdul Latiff, and I would like to present about chapter 6, which is unit trust. Unit trust, also known as managed investment, adalah fund manager pulls money from numerous investors to invest in a portfolio of assets such as deposit, stock, and bonds. It also helps investors to tap the expertise of professional fund manager in order to boost the return on their investment. These are the parties that involved in unit trust, which are unit trust, investment management company, and trustee. These are the types of unit trust, which are equity funds, fixed income funds, Islamic funds, and property funds. Equity fund is the most common type of unit trust. The performance of the unit trust therefore linked to the performance of Bursa Malaysia. Under the equity fund, it have aggressive growth funds, index funds, and international equity funds. For the fixed income funds, it invests mainly MGS, corporate bonds, and money market instruments such as banker acceptance and fixed deposit. Benefit of investing in unit trusts, which are a diversification fund, which means risk can be diversified since the investment are spread over a large number of financial assets. Second is service of professional fund manager. It also called as safety and less monitoring. The fund manager will work on intensive research, market analysis, and attentive monitoring of the economy. Third is liquidity. An investor can sell his units wholly or partially at the following trading days unit buying price. Next is low capital management. It is the initial capital required for unit trust investment is relatively low and affordable to small investors. Last is hedged against inflation. For the last part of unit trust, these are the unit trust charge, which are front-end fee, switching fee, annual management fee, and redemption fee.
Retire means withdrawal from a regular occupation, and normally the word is associated with age. It is important for an individual to plan his or her retirement because we would normally want to live comfortably, standard of living during retirement, and want to determine the level of income needed during retirement. Step 4. Estimate retirement needs are: first is to estimate household expenditure during retirement. Second is to estimate income during retirement. Thirdly is to estimate the inflation factors. Lastly is to estimate the funding for the shortfalls. Sources of retirement funding are Provident and Pension Fund, Private Retirement Scheme, Jabatan Perkhidmatan Awam (GPAs), Pension Scheme Social, and Security Organisation (SOCSO).
Pension planning or pension scheme is intended to provide financial security for retired government employees who opt for the pension scheme, which is pensioner. The objective of the pension scheme, firstly, to acknowledge and appreciate the excellent service with loyalty, dedication, honesty rendered to the government personnel. Secondly, as a bondage for personnel to retain their service with the government. Right. Next, to provide the life subsistence for the dependent of personnel who have passed on during the term of services with the government or after his retirement. Right. There are 4 types of pension scheme. Firstly, compulsory pension under Section 10 Act 2007-239. Secondly, compulsory retirement at the instance of the government under Section 12, alright, Act 227 and also 239. Third, optional retirement under Section 12, Act 227-239, and also retirement due to the privatization of the government agency. And besides, there are 3 types of pension benefit. Pensionable officer who are retired or asked for retired from the government service is eligible for the following benefits. Firstly, which is service pension, which the payment is given monthly. Secondly, service gratuity, which the payment is given lump sum to the retired employee. And thirdly, which is cash award leave of leave when applicable, which also the payment is given lump sum. There are also the rate of gratuity and pension, which is for the gratuity, which 7.5% time the number of month of reckonable, time corresponding of last drawn salary. And second, for the pension, which is 1 divided by 600 time number of month of reckonable, time corresponding of last drawn salary. And for the GCR, which is 1 divided by 30 time basic salary plus fixed allowance, and then time number of leave accumulated up to 120 days.
I would like to present Chapter 7 about Employee Provident Fund (EPF). It is also known as Kumpulan Wang Simpanan (KWSP). EPF provides retirement benefit for members by managing the member saving. EPF also provides a framework for employers to meet their employee statutory and moral obligation. EPF member can divide it into two, that is private and non-pensionable public sector employee. All employees in Malaysia must be registered as a member. Starting 1st of January 2007, there are two accounts available for each member, which are Account 1 and Account 2. Account 1, 70% of the monthly contribution will be credited into this account. Saving in this account is meant to be used for your retirement, and it cannot be fully withdrawn before you reach at the age of 55, become incapacitated, leave the country or die. Account 2, 30% of the monthly contribution will be credited into this account. It helps to make early preparation for a comfortable retirement. It allows withdrawals at the age of 55, owning a house, the down payment for your first house, settling the balance of member housing loan, financing education for members and that of member children, and medical expenses for members and that of member children. These are the part of partial withdrawal from Account 2 and full withdrawal. This part of the all wages paid to an employee is subject to EPF deduction. The related payment are wages received daily, weekly, monthly, and such. Payment for unutilized leave, bonus, allowance, commission, array of wages, wages for maternity leave, study leave, and half-pay leave. These are payments that are not subject to deduction: service charge, overtime payments, gratuities, retirement benefit, retrenchments, temporary and layoff, any travelling allowance, and any other remuneration. Also, this is an infographic of Social Security Organisation (SOCSO), which known as Pertubuhan Keselamatan Sosial (PERKESO).
Estate planning is the process of disposing of an estate after one's death. It is important issue related to estate planning are to ensure our loved ones are able to receive our as soon as possible and assets are passed on to the person of our choice. Process of estate planning are: first is establish what the client wants for his or her estate. Second is would be gather the relevant information in the client in the organized manner. Third is involve the analysis of the entire facts of the client situation. Fourth is the preparation and presentation of the plan. Fifth is the implementation stage. It is here that all the legal document and transfer of property are executed. Final step is letting the client know that a pre-deed review is needed to keep the estate plan current. Estate planning instrument is will and trust. Will is basically a written instrument by which an individual signifies his wishes as to distribution of his estate after his demise. Trust is a legal arrangement or relationship whereby an individual transfers assets to a third party, called a trustee, who are bound to follow a set of directives, rules, and regulations for the benefit of others known as beneficiary or distributee.
Fara'id is a part of Sharia law which stipulates the estate of a Muslim to be dealt with and distributed among heirs after his or her death. The basis of Fara'id is stated in Al-Quran, Hadith, and also Ijma' and Ijtihad. Alright, in Al-Quran is stated in Surah An-Nisa, ayat 11, 12, and 176, which gives specific detail of inheritance shares. And in the Hadith, which is the Prophet Muhammad say, give the appointed portion to those entitled to them. Then whatever remains is for the nearest male, narrated by Bukhari. And what must be started first? Alright, Firstly, settlement of all funeral expenses. Secondly, settlement of all debt, actual or spiritual. Third, testimonial disposition. Fourth, settlement of any claim of harta sepencarian. And lastly, division of.
I would like to present chapter 8, which is will. Will is a legal document in which you declare your wishes for your loved ones and how to distribute your asset after you pass away. Second part of infographic is explain what does a will contain. Third part are the part of person in a will, which are testator, executor, trustee, guardian, beneficiaries, and two witnesses. Next is the part of the reason for making a will as to protect your asset and provide for your loved ones. Other than that are the part of consequences of not having a will. Last part of types of will, which are individual will, mutual will, joint will, privilege will, Islamic will, holographic will, and living will. Individual will, which means the most popular types of will written by individual. Second, for mutual will, which means where two persons or more write their wills in one document or in a separate document. Third is joint will. Joint will is where two persons write their wills in one document. Essentially, it is two wills in one document. Usually, it is used by husband and wife. Next is privilege will. Privilege will only apply to members of the armed force of the Malaysian being in actual military service. Other than that, the Islamic will that known as wasiat. Holographic will, which means a handwritten will and signed by the testator but without the attestation of witnesses. Last is the living will. It is a legal document that a person used to make known his wishes regarding life following medical treatment.
Future financial challenge in 5 to 10 years' time. Financial planning is a continual process which will help us to know where we are financially, what we need to have in the future, and what we must do to reach the goal. The first challenge is money expenses is more than the income. This means the person is exceeding their limit and spend more than what they earn. It suggests to do a monthly budget and should to create a budget that you can stick with it and track down all the expenses and reduce expenses that you are not needed. Second, no emergency fund. Unfortunate things can happen, such as being fired, involved in a car accident, or unexpected injury. Everyone needs to provide an emergency fund for their own benefit. Suggestion to dedicate part of monthly budget to save for this emergency fund. This money can help a lot when rainy day hit. Third is no saving for retirement. Everyone needs to enjoy their retirement. They need to have enough money as preparation for after retirement. They need to think that anything is possible to happen in the future. It's suggestion to make safe sure that employee have an employee provider fund, which is EPF, account for their retirement purpose. Second, apply for provide retirement scheme, PRS, in order to save more money for retirement.
Now we have here is Future Finance Challenge. Future Finance Challenge are more focused to the individual who are having an obstacle when spending their own money. The first one will be lack of money management skills. Everything is skills nowadays. So without skills, you'll be lost with it. You don't know where to put the asset, where to put the liability in your own finance situation. Money management skills also can be defined as how well you can handle all aspects of your finance, from setting up your own paycheck throughout all those payments towards picking up a long-term investment for your long-term goals. Money management skills not just helping you to say no to any purchase, but might as well helping you to develop a plan to say yes to the most important to you. The second one will be late to pay bill. Although it can be once or twice, but if you make it as a habit, it can be the huge consequences in your life. So beware not to be late. Even though when it comes to finance, procrastination, we cannot run away from it. Thus, waiting last minute to pay bill can be costly. At the end of the day, you will end up to pay those late fees and additional interest in charge. Third one and the last to be future finance challenge is technology change. Due to technology change, a lot of manpower has been fired and at the same time lose their income. Without the income, they have nothing to spend for them to satisfy their own needs. In other words, technology often does the routine tasks for us, mostly to those have a short-term job, as their losses are widely accepted. As an example for the short-term job, waitress, data entry clerk, factory worker, and so much more. Most of them are lost their job just because the technology has changes.
Financial institutions will face challenges in 5 to 10 years' time. First is cybercrime. The COVID-19 has made a temptation for criminals to involve in cybercrime. This is because financial institutions make themselves vulnerable by making customer-friendly services. Second is customer expectations. In the future, banks have to adapt with how their customers want their service to be like to maintain their loyalty. This is because the new generation has a better understanding on how technology works. Third is changing business model. The future forces the financial institution to constantly evaluate and improve their operations to keep up with the constant changing of industry regulations.